Alright guys, so things are heating up between the two biggest economies in the world, which means more chaos and everyone will be caught in the crossfire. Now we are witnessing a big breakdown in talks between the US and China. Trump doesn't want to give in. I think the breaking point was when people all called him the Taco president or Taco president. So there's now a big chip on his shoulder to prove a point. Now Bessent is trying to sell us the dream that the US economy will win. And yesterday, he told everyone that US inflation is contained. He went on CBS and insisted that prices are coming down. But is that really true? According to Brookings, tariffs are inflationary for the US because America is still a big net importer, and that's why there's a big trade deficit in the first place. We can see producers starting to increase their output prices to US consumers. There is a lag time before the consumers see the increases, but it's definitely coming. The Eurozone, however, is a net exporter, so US tariffs on them are deflationary. Producers in the EU have to lower their prices to sell to their domestic consumers, very different effects. Now, the fact that Walmart has to pass on the tariffs to consumers should be crystal clear. Why do you think Trump was so furious? There are reports of price increases from 10, 20, or even 30%, and there's no smoke without fire. We are also in a convergence of multiple storms. The Russia-Ukraine war is escalating. Trump's bill is about to launch a deficit tsunami and flood the world with unbridled spending. As a result, global commodities are flying to the moon. Copper has flown up by almost 4%. Crude oil and gas has risen by 4 to 6%. Even wheat and corn prices are up by nearly a percentage point as well. All these are essential inputs throughout the US supply chain. Now you throw this on top of the tariff fire, you get the risk of structural inflation. It's why the Federal Reserve is not even cutting rates yet. And now we have China counter accusing the US of violating the trade deal in Geneva. And there are multiple ways that Beijing can strike back, and none of them are good for the US. Now, the Chinese readout is extremely harsh. It's a reminder to the US that pain is coming. China will continue to take resolute and forceful measures to safeguard its legitimate rights and interests. Now, China's hit back on the US will have serious consequences, especially when the entire economy is hyper financialized. Now, the first lever China can pull is rare earth supply. That should be obvious. That's the reason why the New York Times reported that the US is about to face a critical shortage. China controls 90% of the world's 200,000 tons of high performance rare earth magnets. The US could buy from Japan or Vietnam, but they will have to pay through the nose. Alright guys, we all know about investing.com, but I want to tell you about Investing Pro, the company's flagship subscription product that helps retail investors find stocks others can't. When it comes to investing, you need all the information and data to make the best decisions, but sometimes it gets rather difficult and you just don't have the time. With Investing Pro, you can create a personalized watch list to track your favorite stocks. You'll get an amazing overview of the stock health and potential. And what I love is the fair value calculator that lets me know when to buy or when to sell the stock. Understanding if something is a bargain or overvalued is high up in my priority list. Have you ever wished you could invest like Buffett? Well, Investing Pro lets you learn and copy strategies from legends to get you one step closer. Learn from incredible investing titans like Ray Dalio all with a single click, and you can actually try this now for free. But what's awesome is ProPicks AI. This is the platform stock picker that helps you identify stocks that outperform the S&P. There are 6 different strategies in the US that are updated every single month. For example, ProPicks identified Vistra Energy Corp that returned multiple times that of the S&P. And I use ProPicks AI to find exciting opportunities and then do my own due diligence. And what I love is how much information they provide while making it super easy to understand. And best of all, I managed to get a special discount for you. Click in the link in the description below and get an extra 15% off your first Investing Pro subscription at checkout. There are also second order effects with China's cutoff. Now these magnets are needed to build the factories of tomorrow. Trump is raising the steel tariffs from 25% to 50%. He also wants to make everything from chips to iPhones in the US. And I hope you don't buy the story that every single job will be given to a human being. Many of them will be outsourced to robots. Instead of shipping production for Chinese labor to Chinese labor, it will be done by in-house automation.
Yeah,
Are we going to make?
we're gonna be able to do it through more automation, and there's going to be plenty of jobs for robots, plenty of jobs for humans. I'm telling you, Laura, this is going to be a golden age. And the thing, like,
But if China hits back, there won't be any jobs for humans or robots. This reshoring experiment could come to a grinding halt for many industries, especially the low margins ones like steel and aluminum production. The only way out is for the consumer to forever subsidize these sectors through higher prices. China today dominates the entire supply chain for rare earths. They control 69% of total global mine production. In addition, they have the facilities and they have the refineries to process them. They refine 99% of the world's supply. And that's the key part that most people forget. Meanwhile, the US has virtually no processing ability for the critical metals, which means Trump he needs to build the facilities from scratch using more expensive domestic steel. Even the US can't escape the effects of globalization. China's deeply embedded in the entire global economy. And just rare earth supply alone is a big problem, is a big enough wrench to cause big problems for Trump's reshoring agenda. Now, what if China goes head to head with the US and ramps up the tariffs? Can the US economy endure raising their own trade barriers to Chinese imports? Now, don't worry about China because they have many other suppliers to buy from. Now, Trump's effective tariff rate on the world stands at 13.1%. That's 6 times higher than before he entered office. So prices across the US are at least 13% higher. Even after the Chinese truce, the effective rate is still at 31%. US consumers are facing a tremendous squeeze and paying a ton of money to the US government for Chinese imports. And yes, it's money used to fund that big, beautiful bill, if you can even call it that. As it stands, container shipments from China have been falling non-stop since Liberation Day as well. We are headed back to the March lows last year when June is normally a seasonal high period. Retailers are preparing for the back to school crowd and stockpiling stuff for the holidays. If the tariff pause suddenly gets unwound by either side, we'll see shipments collapse yet again. So the options would be unthinkable for the US. Will Walmart be allowed to pass the tariffs on to consumers like a free market economy? Or will there be price controls that eventually lead to shortages? Because you have to choose one or the other, there's really no free lunch here. And when you hear one of the biggest banks in the world say China isn't scared, China really isn't scared. Jamie Dimon just came back from Shanghai and he has a very big warning for the administration.
There'll be agreements in principle. They will not be trade agreements, but agreements in principle. These give you a framework, to get things done, and hopefully they could do some in July, August, September, October, November. I would engage with China. I just got back from China last week. They're not scared, folks. This notion they're going to come bow to America, I wouldn't count on that. And when they have a problem, they put 100,000 engineers on it, and they've been preparing for this for years.
So that's the situation with China. Diamond just made two critical observations. China won't sign any formal binding agreements, especially during a trade war. Everything will be in principle, which means Beijing will watch what the US does like a hawk and react to it. Just like their response to Trump's chip war escalation, they held back on their rare earth exports. Ultimately, this will backfire on the dollar. Now, since the start of the year, the USD has been dropping non-stop. It has dropped by 10%, which is a very, very significant amount. If you're a consumer, you will get hammered at the checkout counter. If you're a foreign investor, the S&P might be flat today, but you still suffer a 10% loss in your local currency. And this is a clear problem for all classes of US assets. Whether it's stocks, whether it's bonds, your positions, they're all getting hammered. When the dollar enters a bearish cycle, it does so for a structural reason. It won't just suddenly rebound without a good enough reason. Now, the structural problem today is a combination of the tariff war and endless government spending, and Trump is running out of cards. The tariff pause card has been used. He definitely can't hike rates to protect the dollar, plus a re-escalation with China could collapse the entire bond market. Wall Street today is coming to a consensus. The big boys are all on top of the bearish dollar trade. They are betting that the currency rout will get even worse. JP Morgan has been long bearish against the dollar, and now Morgan Stanley is joining the bandwagon. The dollar will plunge to levels last seen during the pandemic within the next 12 months. You don't normally see such bold predictions with such a specific time frame. Morgan Stanley is also recommending bets on the Japanese yen, the euro, and the Australian dollar. The crash will be so severe that you just need a blindfold and a dartboard to make money trading currencies. The more people mock Trump as the taco president, the odds of him doing something crazy really goes through the roof. We can observe this breakdown clearly after Liberation Day. Everything is tied to the tariffs. Now, the dollar index used to be tied to the 10-year yield. As yields go higher, the incentive to buy dollars to enjoy the higher rate should technically go up, but right now it doesn't because the worry of higher rates breaking the economy and the US consumer is now the playbook. Long standing relationships are being broken. The idea of the dollar milkshake theory is getting decoupled. Higher rates amid a trade war is now clearly a recipe for economic instability and a weaker dollar. It's one horrific feedback loop. As the dollar gets weaker, it triggers a further sell off as well. It's a consequence of this hyper financialized economy. Wall Street is so embedded into Main Street that a collapse in one can literally crash the other. Now, the good thing about this is if you can see the train wreck coming, you can position yourself to win. You can't control what the administration does, and no one can predict China's response as well. And according to the bank, the US dollar index will fall by about 9% to hit 91. That's coming in June 2026, and the speed of which is really frightening. Now, I can tell you as a private investor, I'm buying more international stocks and gold because the currency effect is really serious news to me. And if I feel that way, there are legions of foreign investors that are taking the exact same thing. It also doesn't help that traders are all betting on the dollar to collapse. The net position against the currency stands at $47 billion. All the swaps, all the options and futures, the bets are increasing the longer this mess drags on. And should other central banks like China or even Japan pile into this mess, things could get really nasty. And if Beijing calls it quits and dumps their debt holdings, Bessent will have a royal headache. It's a big reason why Trump and friends are pushing for a call with Beijing. The White House said that a call will probably happen this week. But honestly, what will that accomplish? Unless the US scales back their chip war and even a student visa issue, it's going to be hard for China to concede anything, right? It's amazing that China hasn't done more US bonds amid the trade war, but that card is always on the table. And should that happen, more chaos can happen in the treasury market. You have Bessent issue more bonds at a time when China themselves is increasing the supply of debt. Even more pressure on the dollar. It's a big reason why money is now flowing into gold. We are nearing the $3,400 mark once again. Every time gold rises is a signal that the world is falling apart. It's one of the few safe havens left that money can flee to. And really think about it, inflation is not going away and US assets are all under pressure. Foreign investors don't have many choices left because the biggest markets are US stocks and bonds. And now that the US being exceptional is breaking down, money is flowing out and gold is going to capture some of that market share. So we have to watch the dollar carefully. Everything is conspiring to make it go lower. You spend more, the dollar crashes. Trade war escalates, the dollar falls. The only off-ramp left is to end the trade war, and I can't see any other way. But let me know what you think. How will China strike back? And can the dollar ever recover amid Trump's tariff war? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.